And so if we look at the United States, the S&P index has emerged as a store of value. There was a time when you could actually take your cash, put it in a bank account, and generate 5% interest. And if you thought you're getting 5% interest and the natural inflation rate was less, then you would do that. Most people concluded that that wasn't good enough, and they actually became stock market investors or real estate investors. But there was a debate about what the inflation rate is. And so if you roll the clock back 30 years, some people, less sophisticated, would have put their money in a savings account. Other mid-sophisticated would have put their money in a mutual fund. And I'd say the highly sophisticated put their money in commercial real estate or real estate ventures. And the reason they put them in real estate ventures is because real estate offered greater property rights and greater leverage. You could lever real estate 5 to 1, 10 to 1, and more readily finance it without a mark to market. So I would say the really sophisticated long-term investors looked to commercial real estate or some real estate play. The convention was, I put it, disappeared maybe 20 years ago, or certainly 10 years ago, when the yield on credit, when the yield on savings accounts went to zero. So when the yield on savings account is zero, then there's no one thinking they're saving money at 0% interest. The perception was still the inflation rate was 2 or 3%, even though it was much higher than that. So now long-term store of value moved to a focus upon stock indexes and real estate and and ETFs. The king of all ETFs was the spider, the S&P index, but we had an explosion in ETFs in the past decade, and there were all sorts of other types of exchange traded funds that represent ownership of a share of commodities or companies or something. And so all of those things are, the ETFs are securities. And if you're not going to save with securities, you're going to buy individual stocks, which is a bit complicated. And some people did that. And the last thing is maybe, again, you go back and you invest in real estate. Now, commercial real estate investment is really very capital intensive. So you have to be in a 0.1% or the 1% of the investors to have the capital to do that. Most of the rest of the investors, if they wanted to pursue a real estate strategy, of 2021, after the pandemic crisis, we had monetized a lot of different assets. We had a spike in housing prices where we're basically putting a premium on housing in excess of its utility value. We had a spike in commercial real estate. We had a spike in meme stocks in their value. We saw extraordinary spikes in collectibles, in watches, in sports cars, in artwork. So as the central bankers were flooding the economy with excess currency, the currency is trying to find a tangible asset that will hold its value as the currency debases. And everybody chooses a different one depending upon what they know and what they're comfortable with. Bitcoin, right, is one of those assets which is now being monetized, and it is rising through this chaos to be the apex property asset, or the apex monetizing asset. So I'm of the opinion that we're going to see a consistent demonetization of other key assets, and one asset that you'll see demonetized, that we're seeing demonetized right now, is bonds. I mean, I guess the big three categories. So the big four are the currencies, the bonds, the equities, and the real estate. They're starting to be demonetized now. And I'm not going to dwell on bonds. That's probably a discussion for another time, except to state that, obviously they're crashing. They've lost 20, 30, 40% of their asset value as interest rates come up. What I'm going to do is I'm going to focus upon real estate, because I really think the interesting discussion here is how Bitcoin demonetizes real estate. And what will it demonetize? Well, what does it mean to demonetize? Well, There's a value of real estate to a utility value to someone that's using it, right? The true utility rental value. And that doesn't matter whether it's a consumer or a business. There's a utility value to the real estate. And then to the extent that the price of the real estate is beyond that, that is the monetary premium. And there's a whole lot of commercial real estate that has a monetary premium. The way that you would know that it has a monetary premium is you think about all the people that have excess cash and they don't want to store it in cash. They don't have a safe bank account or a savings account to put it in. And their view is, I've got to buy an investment property. Why do you even want to be an investor, right? The only reason anybody wants to invest in anything is because they believe that the risk-free rate of return on their money is too low to keep up with inflation. If I told you that the money was going to grow in value 10% a year and you knew the inflation rate to be zero, you wouldn't invest in anything, right? You would just put your money in a safe place and wait for it to create in value 10% a year. So an extreme hard money environment, the average person, right, the non-expert isn't an investor. The only people that really should be investors in theory are professional investors, right? Professional venture capitalists and professional investors that spend all of their time analyzing opportunities to ascertain the true long-term value of the cash flows. But the world is full of people that are actually making investments in order to preserve their wealth, and they're doing it because of the weak money. And so one of the places they make their investments is in real estate, investment properties. It could be I got a second home and I rent it out. It could be I bought an apartment and I rent it out. It could be I Airbnb something. It could be I went in partners with 3 of my friends and we bought, a small of real property. Or you can start from nothing. But let's start with real estate, real property, and strip every defect away from it. So let's say you had a piece of commercial real estate. Maybe it's a $2 million building called a warehouse, or $2 million. That's 100 Bitcoin, 100 Bitcoin building as of right now. And I happen to pull out a genie in a bottle, and the genie comes out and says, well, Michael, I'll give you infinite wishes. And so I start casting magic spells to fix the defects in my warehouse. So what's the first defect? Well, the warehouse has got a finite life. It's only going to last 100 years. And after 100 years, the warehouse is going to fall down or rust. It's got a problem there. It won't last 1,000 years. It won't last 100,000 years. So I say to the genie, why don't you make the building last forever? Like literally immortal. Okay. How do you do that? Well, just make it out of something which is literally indestructible. How about pure energy, pure solar energy? Like stars last 1 billion years. So make it out of star stuff.